Good morning, everybody. I hope this gap down is not making it a bad morning for you. The charts certainly say for some it's going to be. So we've got this gap down, which looking at what happened last week and at the end of the day on Friday, it sets up potentially a painful situation, short term anyway. And the reason for that is we look at how things were trading at the end of the day on Friday. That obviously we had the big gap reversal, which was, just a big gap down and a technical bounce. And, everything looked like it should go up into this, what I'll call the sell zone or kill zone, as with sellers showing up in that area. And the confidence going into the end of the day was good, meaning this consolidation that was happening after the run up showed confidence that buyers were believing the worst was over. And anyway, it had room to go up a little further to where profits could be taken or shorts being put on. And so now we've got this consolidation that occurred over several hours and prices are gapping below it. So that pattern tells us that there's a bunch of longs there that are now caught with losses. And so now we look, okay, it's gapping down, which leaves that overhead supply there. With traders in hope mode that it'll come back up to reduce positions, or maybe it just keeps going and, the day is saved, so to speak. So when we see what's happening here pre-market, overnight pre-market, was that it held this 430 area. And I picked SPY versus the futures here because there's a big open interest in put options there, which tends to put a little floor at that level. And we see it's lined up with this little congestion area there where it's held. And it had its bounce up into this area and got knocked back down. And so now we've got an upside shakeout pattern. So sellers came in aggressively and it didn't even get to the bottom of this consolidation before that happened, knocked it back down. And so now as we go into the open here, continuing to go sideways, if it breaks below here, well, clearly that opens up the door down to the next level. And looking at the next, where there's big open interest is down here. And technically, there's really nothing to stop it because of the way it went up. Let's go to the 15-minute chart. And so, you can see, this is where prices are trading. This is the next day. I wouldn't really call it an unfilled gap, because it did come down into the prior bar there. And so breaking below here, there's really not much to stop it from going down into this area where buyers would want to step up again. Now, of course, we have a concept called creating support, which again, this looks like a bad tick here, but requires it to create initially a pivot. And we would use the 5-minute chart intraday for it to pivot and then retest there. And then maybe they can start to what we call rebuilding the damage. As to going sideways a bit. And we'll take it step by step. Right now, this initial gap down is short-term bearish, and we'll see how low it might go. So this area here's the 430, the 425, and there really isn't much to stop it from going down. So buyers, for whatever reason, have to step up here at some level into this void and begin to create some price support. Now, there could be support in another market that maybe the Qs would be the obvious place where things begin to stabilize. And we see if it rebuilds from there, whether we just go right back down to the lows that, here was this big gap down that created an opportunity. It rallied. It couldn't get up here, which is what it should have done just based on historical technical patterns, and it couldn't do it. So, now it's gapping down as where you can see, and clearly bearish. And So the difference could have been is if this had gone up and it was rallying and never went sideways and it just peaked out rather than going sideways for hours and leaving this larger congestion area up there. So that could have been the difference of that. Let's just say the day would have ended here and now it's gapping down from a V type of a top, which wouldn't have left all this supply. So that's kind of the psychology behind the pattern. You know, where it wouldn't have left hours of buyers and had it anticipating the move up and the worst was over it. And now that's caught and that leaves supply to drive it lower. And we'll see how that plays out. So looking at the intraday data, if it breaks 430, which is an important level as far as options go, goes down to the next level. All right. So now looking at, well, let's go to the futures and then we'll look at SPX. And so we see where it is. So look, you see the gap down. So far, it's above its opening price. So a little bit of a positive there. Overnight, we got around 42.60-ish, give or take. As you can see down here. So nicely above, but spread this out here. And you can see the upside shakeout. And it's just consolidating there. So again, starting to break below here. Why is anybody going to want to buy it? And then, so we'll see where this ends up. So far, it's just an inside day. Breaking below here, well, then obviously that opens up the door to much lower prices and a topping pattern up here. Oh, again, we'll see how it plays out. So far, it's holding up relatively well, but it did have that spike up and came back in again. Not friendly environment for technicals. Yep. Okay. Do you think SPY 420, 419 credit spread expiring today is a no-brainer? No, I don't think it's a no-brainer. Going back to SPDR 420. That's where it should hold up. It should hold up. But if you're willing to do SPX, which always has more premium, it's leveraged, you can go down 4110, even 4105. You can go way down here, and that'll be a no-brainer. So, you know, just going 42 it should be okay, Ali. It should be okay. Just looking at, you know, relating 4200 and SPY 420, the distance that far down, I would think it should be okay. But no-brainer means that, in my mind, it's just never going down there. And so to say it's going down below this low today, I don't think so. I mean, not unless, you know, there's some news about Putin and nuclear weapons and whatever that, which is probably a scare tactic. But I mean, if one of those missiles actually, they detected that it was actually going into launch mode, you know, probably all hell breaks loose. And so, but just looking at the charts right now, I'd say down here in this area, that's a no-brainer. And so I didn't even look at the call side, but you can see, you know, so up here would have been, up above here would have been what I would call basically a no-brainer up above here. 4,500. There's nothing there. Anyway, 45. No, there's nothing up there. So look, the big juice is down in the puts. And so to think that it's going down here after this rally back up, well, there's nothing to stop it if it starts to roll over as far as support goes, to travel that distance in one day. Right? That doesn't, you know, just historically patterns, that's not going to happen. Yes, Peter, I'm talking about SPX and 0DTE. All right, let's continue here. Qs, you know, similar pattern, gapping down, consolidation. So far, it's holding up relatively well. after this little breakout and little upside shakeout, same thing, but you can see the support level that's right there. 431, give or take 431. It's not a terrible big gap down, but it's not meaning it's not gapping down below the low, but it's gapping down below that opening price of that bar. And we see the same consolidation up there. And so, it's starting off today, obviously, with a gap down. And part of, the theme here, what I, in the title in YouTube, Trading Gaps and Trader Psychology, is that not all gaps are not created equal, meaning you can have, the market's gapping down, like you see here, 150 points. And the structure of the pattern intraday could be quite different versus having hours of consolidation gapping below and little support below, whereas it could have gone up in a very different way and peaked with lots of support levels below, where this just doesn't have it. So this number is a starting point. Then you go to the charts and see what actually happened in the past. Russell, not too bad. I mean, this was beaten down already. So it's just going to become really important that, over the next week or so, that this holds up. Now you've got a pivot. This will become a pivot when it's got 3 days over here. So assuming that this holds, this is the concept of creating support where there is none. You can see there's nothing to the left, but it made a pivot and there was a retest here. And so you got a trading range. Dow, obviously gapping down, consolidation, popped up, same intraday pattern, something that we've been seeing. Now, just looking at this pattern and you see this in various charts, but just pointing out, I mean, just look at this. Kind of an ominous looking top, and it held that level on initially on this gap down, but a close below here could really open up the door to something a lot uglier. We're not near that. This is a pretty good start to holding that area, but just keep in mind we've got a very long pattern of a rounding top up above here, and if it breaks below that, clearly it can go down quite a bit more. Let's see what happens as it happens. Transports had a nice bounce like everything else. Again, hours of consolidation, little to nothing to stop it from going down. VIX, set your alert up there. If it triggered, if you had something triggered, reset it. And interest rates, it's coming down a bit. 5-year, everything coming down a bit here. So money moving into bonds makes sense. Nervous market, and Bitcoin is down. Right, so far holding the lows like everything else. Why does SPX have better premium? Because of the leverage, Alan. It's a much more leveraged product. So you get on the wrong side of it. It's like anything else with leverage. It's going to cut real deep. So you might look at the premiums in SPX and the distance, say halfway between where I'm saying it's a no-brainer, and you would think, wow, that's huge, that money. But God forbid you're wrong, well, you better cut it out. So technically speaking, just looking at the prices, you've got a big area before something you're wrong. And so you can say, well, there's two ways of managing the money, so to speak. Well, I'm willing to lose $500, which technically can mean absolutely nothing related to the charts. And, you say, well, and just picking a point, let's go back here. So you could pick a point and say, you know what, SPX is over here, and this 4,200 level, the premium is huge. It's never going down there. You could think that, but if something ugly happens and it goes down there, you're going to lose a tremendous amount of money. Whereas you say, and you could say, well, at that or at 40 at here, you could say, well, here I'm going to lose X amount of money, so I'll kill it. But there's not technically nothing there. Whereas you could say, take a smaller amount of money down here, the probability of going there is, let's call it pretty slim. What number is that on IWM? Well, I would say down below here. So it would, the probability of going below that, now I don't know if there's any premium. So I always look at the pattern and say, where shouldn't it go? And then from there, like, well, look at the option table. Oh, there's a whole lot of premium there because a bearish market and option traders are bidding up the puts. And I go, oh, below 180, there's still good premium. Well, what's the odds of getting through 180? I can't type the symbol there. Hold on. I still got a decent amount of time. So let me just look. I don't know why. TC 2000 clears the quotes just a little bit before the open, so I don't know where that is. I can't go look at the other system now. So just look down below. Now there's nothing below here, but yeah, just saying what is the probability of going from this point down to this point in the day? I would say pretty small. Just imagine what that would look like. Right? If it opens up here and a bar that big, and saying, looking at the average range and saying, has there ever been a bar that big in the recent past? And say, not even one close to that. Well, what's the likelihood of going down here? Slim to none. However, a nuke goes off. You know what I'm saying? There. We look at the charts and there's the unknown, and something crazy could happen, but you can't assume crazy. Ali's saying the premium for 4110, you don't have to go 5 wide, Ali. The way we look at SPX is you can go 50 wide. The width is just used to say, okay, I'm controlling some risk and margin. It's not about trading a credit spread from the same way you would a stock, meaning 5 wide or 10 wide. You can go as wide as you want to get the premium. Take a trial to the green room. I don't have time to discuss all of this here. Pre-market oil, getting rejected from 100 makes sense. It was up there before. Silver consolidating its gain, gold consolidating its gain here. So look, we're starting off the day with a negative gap down. The uncertainty still looms there about Russia and what they're going to do. And all of a sudden, nobody's talking about the Fed and raising interest rates, but that's the next thing on the horizon, obviously. All yours, Dan.
All right, good morning. I'm just doing an alert here. Yeah, exactly. All eyes are off the Fed for now. All right, so we don't have that much inventory actually. We had a good trading week. We nailed a ton of shorts, reversed, started doing put spreads, took profit on a couple put spreads, and then we're holding a few. So yeah, some are going to be gapping against us here, but I think they're all far enough away. Yeah, I mean, we did them under these Thursday lows. So D-Dog here down a couple bucks, but relative to way down here is nothing. And we got, believe it or not, we have 100% bullish trade ideas for this week. And I clearly said, if we get a bearish gap down and we change the tune on Monday morning, then it doesn't bother me one iota, because then they're not going to trigger. But look at this beautiful gap, big wide range bar reversal. That's a beautiful pattern right there. So if it takes out Friday's high, I have no problem entering with the market being bearish right now, none at all. On this F cell, we have another gap reversal. This one's actually gapping up. So, you know, fuel, energy. So maybe the turmoil is helping this little stock. But this looks fantastic. I think this over time, not a straight shot, but I think maybe the 200. And it's not a core trade because weekly and monthly are in downtrends, but it's a beautiful, beautiful entry right here. All right, let's go to, if you have a question about an open, ask me. Otherwise, I'm gonna go right to gappers here. All right, TDOC, I just saw on the ticker was rocking as Greg was talking. I'm like, what's up with this? I don't know if it's earnings or news. Let me see, TDOC, 427. So no, it's not earnings. I have no idea, but this is a directional 30-minute high maybe, and a put spread. Nice gap reversal. A run. Yeah. I mean, we were scanning for 1, 2, 3s in the green room last Friday, and there were the most that I've seen that I could ever remember. There was like 84 of them. And this one's in a downtrend, but it's a beautiful gap reversal. So that looks fantastic. Run 30-minute high. I'm going to put that in the window. Looks great. And so obviously competitor of F-Cell. So let's look at that sector for sure. Amazon deal. All right, thanks. Is Amazon moving? Nah, gapping down a little bit. Facebook's on a downtrend, but that's a 1, 2, 3 gap reversal. Up and down, which is fine because it's not, the entry is Friday's high. ROIV bottoming pattern, gapping up to 730. Put that in a window. ROIV. Mullen. It's not a bottoming pattern. It's a downtrend. Look at this volume here. Wow. And now it's gapping up. It's a big percentage gap. It's massive. But that's could be interesting. Reggie, $60. That's an excessive gap. Well, it's going sideways. That kind of looks like a buyout. RTX. You know, what jumped out at me as soon as I saw this stock was this massive bottoming tail, which happened on Thursday. See, down in the morning, back up, wide range igniting. I was hoping to get a 1, 2, 3 on that, but it's gapping up. Plug, here you go. Plug's another one in the sector. F-cell run, another gap reversal and support. That looks great. I think that one had earnings though this week, is why we didn't put it in the letter. Now here's a bottoming pattern, and you got your 2 something something bars Thursday and Friday, but it's gapping up. We'll watch that on a pullback. Oh, talking about Russia, obviously. Where are you? RSX. Now, do you remember on Thursday I was saying fundamentally, I was looking at selling the $10 puts. And I'm like, my gosh, this thing just got cut in half in a week and a half. Now that the governments are restricting them out of the banking system, yeah, of course, that's going to cause some financial pain. But secondly, and rightfully so, I was happy to see it. I was happy to see these other countries, including Russia, people protesting. So yeah, I mean, this is a bad actor, this Putin guy. But all keeping all that aside, we're traders. So I'm going to watch this just because I'm interested in how low can this thing go? And they doubled their interest rates overnight from 9 and change to friggin' to 20 because the ruble is at all-time lows, I think, to the dollar. So yeah, they got themselves in a bind over there. EPAM gapping under Thursday's low, that's bearish. 30-minute low, that's a call spread idea. And Nielsen, this was a nice gap and snap trade on Thursday. And I even said that pre-market so a gap and snap is you have fluid bars down, then an exhaustion gap, 30-minute high, short-term low. But now it's gapping up again. I don't know if this was earnings list. John's asking about where is support for Amazon. Well, first obvious question is what time frame, but I'll assume you're talking about daily, and it's just the textbook answer that we give. The first spot of support is a prior day's low, and the prior to that is a pivot low. So this isn't even a pivot yet, but it's still a wide range bar and major support. And if you're talking about 15-minute chart, same concept, but just look for your pivots or congestion. So it's on 15-minute support. EXC, another one that jumped out at me. Beautiful bottoming tail reversal at the 50, and then a wide range igniting, gapping down a little bit. But if that can take out Friday's high, that looks higher. X-ray getting whacked. Well, there's not much volume here. We'll come back to you. Yeah, FT, no queuing. Wow, FCell and Run are both really popping right now. Here's another beautiful, beautiful gap reversal. It's technically not a 1, 2, 3 because it's not an inside bar, but this one actually was up and now it's down again. Wow, that is a monster percent range pre-market. Look at that, 335 down to 290. Something's up with that. Net alarm just went off, APPN. So look at that, folks. Did you remember what I said a couple minutes ago? In terms of every one of our trade ideas is on the bullish side. And I said, you know what? They're only going to trigger if they're strong. So we got FCell, we already talked about. Net alarm, look at that. This thing looks fantastic with a gapping down market. We don't trade in the first 5 minutes, but that's good to go, 5-minute high. APPN, the same.